basis. Lot of agricultural loans were not classified. Then it was identified and then relief was given. That is different. But in the books of accounts, many agricultural loans were left out. So this is an area where one has got to be very careful. Where one never have to rely upon the technology to the extent of 100%. Though there may be control in paper, all these things, where the classification cannot be changed at the branch level or the zonal level, only the inspection department can change it in CBS platform. These and all will be in there in the system or in the routine. But in spite of all these things, since the master data is not clear, is not clean, definitely this is bound to happen. Then accounts with temporary deficiencies. Non-availability of adequate drawing power as evidenced by the latest stock statement not older than 90 days. So 90 days time is given to us or to the branch to get the stock statement. Otherwise they will base it on the drawing power. Here in one instance is that in determination of drawing power, it is the creditors which are deducted first, then the margin. That it should be uniform, definitely. The second thing is that the composition of the stocks, that's very, very important. So you cannot just go by the balance, the composition. Let me say one example where we found out. It was a sugar company, sugar manufacturing company, and some stocks were confiscated for contravention of certain state rules, and huge stocks were stored for the past 3 years. Those stocks were forming part of the drawing power. So there was a letter in the file stating that confiscated stock is so much and this is in good condition or whatnot. Then we had asked for what is this present condition now, because this letter was given 1 year back. Then immediately they conducted one survey of the stock, and they came out with a report saying stocks are damaged. So when that was minus from the DP, there was hardly anything left for drawing power. So the stock statements have got to be looked into very clearly, so that this sort of anomalies should be identified to find out the real drawing power. So 90 days time is given, and temporary excess may be there, but normally you can find a lot of cases. In fact, 89 days it will be in excess, and the 90th day it will be all right. They will say, as per norms, it is fine. Yeah, as per norms, they have fulfilled. That is, it is a performing asset. But one should go into what is the reality behind it. Whether there is diversion of funds, the excess have gone where? Whether it is for the business of the borrowing unit, or is it for some other purpose. That we will have to verify and then ensure that it is only a temporary excess. Then we need not treat it as NPA. Similarly, non-submission of stock statements, one has got to find the reasons why it has not been submitted. If it is for valid reasons, we can always accept it. See, the one reason why, while considering as NPA, you immediately recall the account. And when the operations are going very well, you are only spoiling that account. That is another practical aspect that has got to be looked into. So, if there is only inherent weakness in that account, then only we can go for an NPA. Otherwise, we should treat it as temporary as for non-submission of stock statements. The non-renewal of limits beyond 180 days. Any ad hoc limit or regular credit limit should be renewed in 90 days, but another 90 days is given. So it falls due after 90 days, then overdue for another 90 days, then it becomes an NPA. So here also the ad hoc limit renewal has got to be looked at with skepticism. They can always make it a part of regular limit. They cannot go on continuing the ad hoc limit. Then it has got to be looked into very carefully, and the reason should be found out why this ad hoc limit is being continued. One of the reasons that is cited is that the financial statements have not been submitted. So they try to make a review. They try to make a review and extend the time of credit limit. If there is a review, then the manager will come out saying that there is a review, so why do you want to consider it as NPA? But our duty is that we should go into the review in detail. On what basis they have reviewed, whether financial statements have been submitted. If the financial statements are provisional, then you have got to be very careful. You have got to compare that with the previous year and find out whether it is in line with the previous year, and whether the operations warrant that much of provision, that much of projection in the financial statements. All these have got to be verified. So it cannot be simply taken, because in practice what the branch managers do is that they come out immediately with a review and say that no, this is not an NPA, I have reviewed it. So the basic papers, the supporting papers for review should be looked into very carefully to ensure that the review is genuine, not to avoid the NPA. This upgradation and regularization about the balance sheet date, as I told you earlier, the source of funds have got to be verified very carefully so that they are genuine. It is not out of sister concern transfer or granting facility to another unit and getting it transferred to this to make it regularize. Definitely, this should be looked into. Then classification of borrower wise and not facility wise. Where there are exceptions, one is this bills discounted under LC. When other facilities are classified as NPA, bills discounted under LC will not be classified as NPA. But if the LC is not accepted, or if it is not paid on due date, then it will form part of the loan accounts and it will be treated as NPA. Sometimes the devolved LC or BGs, that is bank guarantees, will be parked in a separate account. So they will not form part of the advances. They will be parked in separate accounts. Such accounts have got to be identified, and then only you should include it under the advances and provide for it. So that should not be missed. Then consortium advances. It is left to each of the banks to decide whether the account is performing or not. The decision of the other bank does not come in any way for the classification of the other bank. Or else the funds will be transferred. One bank will be recovering everything and the share of recovery will be transferred to the other member banks. If that is not coming through regularly, one should be cautious to classify it as NPA. So there should be an assurance from the other bank that they will transfer the amount to this member bank. You are seeing the account in the hands of the member branch. Erosion in the value of security is significant. This is particularly in the case of those accounts which have been classified as NPAs already. There will be fast erosion, in fact. The valuation report before becoming NPA will show the value of the property as 1 crore. After classification, the value will be coming down to 25 lakhs or 30 lakhs or 50 lakhs as the case may be. So this erosion in value, even otherwise in performing accounts, suddenly there may be some fall in the security because of certain developments, either statutory developments, some places being taken over by the government or something, then definitely it may lose its value. Or there may be some other issues which may be cropping up, which may not due to pollution, so that the land will lose its value. So these aspects have got to be taken into account, and adequate provision have got to be made. Apart from that, due to fraudulent practices, the valuation is bound to come down. There also, we will have to treat it as either straight away. We need not go up the ladder from standard, substandard like that in inordinate way. We can straight away go into the doubtful asset or the loss asset, as the case may be. When the value of the security is hardly 10%, definitely we can treat it as a loss asset. It's a moratorium. Here, the sanction condition has got to be studied very carefully. If the interest, the moratorium interest is due after the moratorium period, then the due date, the overdue will be considered from that due date only, not from the date of debit. Maybe debit will be made every month or every quarter. But what is the due date of moratorium period interest? That we will have to ascertain. From that date only, we will have to take into account the 90 days. So that has got to be careful. But the wordings in the sanction are very, very important. You have to go through that because each sanction may have different definition of moratorium period interest. But this is one of them which has been cited in the Master Circular on agricultural advances. When there is a natural calamity, like a cyclone or earthquake or anything, then agricultural loans will be rescheduled. So when such reschedulement take place, either by means of a fresh term loan or the sanction of a fresh term loan or the reschedulement of the term loan itself, which is already been given, then that will not render such accounts as NPAs. Because this is one condition where there is impairment due to natural calamities. Then government guaranteed accounts, there is only one aspect here, is that in central government guaranteed accounts, when it is repudiated only, it becomes an NPA. But as far as state government is concerned, it will be treated at par with any other account. The NPA norms will be applicable straight away. As far as income recognition is concerned, in both central government and state government guaranteed accounts, it is on cash basis, as in any other account. So it's only the repudiation of the guarantee in the case of central government that makes the difference. Otherwise, it will be treated at par with other accounts. Now we come to the projects under implementation, DCCO. Date of commencement of commercial operations. is one of the major issues that affects many of the industrial projects, where during the time of sanction, they will be very optimistic to present their project reports and say that our date of commencement of commercial production will be such and such date, which may not be realistic. But to impress upon the bank that they will do it very fast, they will give an unrealistic date. This happens everywhere. But in actual practice, this does not materialize. As a result, there is bound to be some delay. Some of the delays are due to reasons beyond the control of the borrower. Some of the reasons may be because of the borrower himself. But many times it will be due to either court cases or arbitration proceedings or some conditions which may be prevailing which they never expected to happen. So it is the duty of the branch, in fact the bank, to draw a realistic DCCO, and it should be documented properly in the appraisal note itself, so that the technical team of the bank should appraise the loan in a realistic manner and fix the date of commencement of operations. That is what is being emphasized by the RBI. Now I have given how classification should take place. That is, there are two types of projects. One is infrastructure and another is non-infrastructure in respect of DCCO. DCCO is very important because the special regulatory treatment of restructuring will be discontinued after 31st March 2015. But with one exception, the DCCO provisions restructuring shall continue. So this will continue, but others will go, the special regulatory treatment. So this assumes importance, definitely, in that context. So if 90 days recovery is not there, unless it is restructured, it will be treated as NPA. It will be either substandard or doubtful or loss assets, depending upon the case. Similarly, in the case of infrastructure projects, 2 years time from the original DCCO is given. Extension. Unless it is restructured, then it becomes actually regular as per record. Unless it is restructured, it is regular. So 2 years extension is given for infrastructure projects. Then if it is further delayed, another 2 more years are given, but because of court cases. If it is delayed because of court cases or arbitration proceedings, then it is given 2 more years as far as infrastructure is concerned. Whereas in the case of non-infrastructure, one year is the time from the date of commencement of production. What is fixed or what is considered original. What is original means here, what is considered at the time of sanction. So further 1 year is given for non-infrastructure loans. Then as I told you, extension of 4 years, 2 plus 2. In the case of non-infrastructure loan, another year is given, actually up to 2 years is given. So it becomes totally 3 years for non-infrastructure. For infrastructure it becomes 4 years. 4 years in the case of only court cases. In other cases it is only in infrastructure loan it is 3 years. So this I have classified. Now as far as provisions is concerned, there has been changes. As was told by my predecessor speaker also, it is 5%. What has been classified as on actually after June 13 actually, then it becomes 5% straight away. 1st June 2013. Whatever is classified under infrastructure loan or non-infrastructure loan, it will be 5% will be provided for standard assets. Thereafter, in the previous, whatever has been considered in the previous years, whatever stock of such restructured assets are there, then it will be increased from 2.75% to 3.5% for July or March 14. Thereafter, another 0.75% for 15, another 0.75%, making it 5 in 2016. So to get it, these DCCO cases, what I have enumerated, to treat them as standard, there are certain conditions attached to it. One is the application should be made before the expiry of the 2 years or 1 year, as the case may be, from the original date of commencement of operations. That is very important. The application should be there before the commencement. If it is given after commencement, then that is after 2 years, after the completion of 2 years or 1 year from the date of commencement of the original date, then this facility of getting it classified as standard will not be available. And at the time of giving the application, the account should have been standard. And at the time of decision regarding the reschedulement also or restructuring, it should have been standard account. Then in the case of moratorium period interest, bank should not accrue it. It should account it for on cash basis after 1 year or 2 years, as the case may be, depending upon the infrastructure or non-infrastructure. So it should be on cash basis, because high risk is involved when there is second extension. That is why the logic behind it. Then the provision I have enumerated previously, this should be continued for 2 years. This cannot be stopped once it complies with. It should be continued for 2 years for standard assets. The near extension of DCCO should not be considered as restructuring. If the revised DCCO falls within the period of 2 years or 1 year, that is in infrastructure or non-infrastructure, from the original DCCO, provided all other conditions remain unchanged. That is, there is no other change in conditions except change in DCCO. If it is there, then it will not be considered as restructuring. Then if there is a change in date given by the concession authority due to some inability to carry out the project, then it will not be considered as restructuring. Provided the conditions are, it should be a public-private partnership, the project, then disbursement of loan is yet to begin, and revised DCCO is documented, and viability is established. Remember, any restructuring, viability is very important to be established. Without establishing the viability, if the bank is going for restructuring, the auditor need not agree to it. In fact, he can always differ from that when the viability is not there. Because each industry has got its own parameters which has got to be compared, and viability has got to be established. It is very, very important because you are reviving a unit. So one has got to be very careful. Similarly, increase in project outlay also, there is a leeway out to treat it as standard. It will not be amounting to restructure provided some conditions are fulfilled. One is it takes place before the DCCO, and rise in cost excluding cost overrun is 25% or more of the original outlay. If the original outlay was 100 crore, now it has become 135 crore, including the overrun cost of 5 crore, definitely this will not be considered as restructuring because 30 crore, which is on account of scope, increase in scope of the project, it will not be treated as restructuring and it will be allowed to remain as standard. So even if you restructure it again in the future, this first restructuring will not be considered. So detailed assessment, and on re-rating it will not follow, it will not fall below the previous rating by more than one notch. All these conditions have got to be fulfilled to treat it as not as restructuring in the case of increase in cost on account of scope and size of the project. Then commercial real estate projects also are out of the ambit of special regulatory treatment. They will be considered as restructuring as in non-infrastructure projects. Then funded interest. Funded interest as and when realized only it can be taken. If funded interest is being done with a provision, corresponding provision in the contra entry, then on realization only it will be taken into account as income. If